Good afternoon and welcome to Money Tips. Hi, this is Charles Kelly. Well, you may have read that house prices have jumped last year in 2020 despite the worst recession in the UK in 300 years. And we've heard different figures. We've heard 7 to 8%, but the official figures by the Land Registry shows that prices jumped by 8.5% in 2020, and which is amazing considering the situation in the world and in the UK right now. Now, this is the highest yearly growth since October 2014, and the average price in the UK is now over £250,000. Now, the Office for National Statistics published these figures. These are the official Land Registry figures that differ from the lender figures. Like you get reports by the Nationwide and Halifax, which are the two big lenders that account for most of the lending in the UK, and they have their own way of calculating property prices. But the Land Registry is where the title deeds are registered at this official body. So they have these are the real figures. In other words, the actual nuts and bolts of it. So the 8.5% in 2020, which is amazing. But how long will the party last? We've seen that property prices are at record levels, and stock market prices are also at record levels. Gold has gone up. Bitcoin has gone crazy. Near $40,000 for a Bitcoin that nobody knows what they can do with or understand. And that's not the only cryptocurrency that is just going mad. We're also seeing that commodity prices such as oil and other commodities are also rising. Inflation is rising. They say it's tipped 2%, but the average inflation rate in the shop, the consumer prices that we are paying for food and for electrical goods and things that we need, basic consumer goods, have gone through the roof. And yet they're saying inflation is standing at just under 2%, which I don't believe. I think the real rate of inflation is much, much higher. So the UK is made up of distinct property markets. It's very different from London. I said that the average price in the UK is £250,000, but in London it's just under £500,000. So, when we think of property, it's not just about London where, you might see Russian buyers buying, £40 million, £50 million mansions. It's a world apart from outside of there where, people are struggling to buy a house and you can get properties in the greater London area, in the outskirts of London, for £200,000, £300,000. I was at an auction last week where houses were selling for around £300,000, maybe 10 miles outside of the centre of London. So it's a very different market. And then you go to the northeast, where you can pick up properties for £40,000 and £50,000 houses, and prices there have not moved much since the last financial crash. But Wales was always considered to be a place where things were sluggish. And a lot of investors were going to Wales to buy cheap properties, do them up, rent them out, usually to benefit people. And Wales had been a bit flat. I'd looked at parts of Wales, but it's just too far to go and check things out. But there's been a recent boom, and it enjoyed the fastest growth in 2020, 10.7%, and now the average price is £184,000 in Wales. And this is partly due to a boom in second home purchases by these pesky Londoners going out to Wales to want somewhere by the sea in a remote area where they can get away from these people with COVID. So places in the countryside, and including Wales, have seen a little bit of a boom because of people buying second homes. But actually they don't like it in Wales. They don't like Londoners going into their areas and villages, buying second homes and then turning up at the weekends in their Range Rovers with their Waitrose bags. It's the same thing happening in Cornwall and Devon. They don't like it, but there you go. That's it's an open market here. We haven't got restrictions on that sort of thing. Northwest had the highest growth in England, 11%. London rose only 3.5%. Parts of central London, I think, fell, but on average, London rose by 3.7%. So we're seeing a desire for more open space. Detached properties rose by twice as much as flats and maisonettes, up by 10% as opposed to 5%. And, in England, prices climbed on average, I said, in England by 8.5%, to £269,000. In Scotland, 8.4%, and Northern Ireland also went up by 5%. So that's where it goes. Now, a lot of this is down, as you probably know, to the stamp duty holiday, which has fueled a bit of a boom because people were trying to get in before the stamp duty holiday. But a lot of the country is not even affected by this. A few £1,000s of stamp duty, if you're buying a place in the Midlands or up north, is not going to make a huge difference one way or the other. If you're buying in London, it can make £15,000-20,000 difference. But that's due to end in March. There's been intense speculation that it will be extended by 6 weeks. I think it will be extended by a certain period to give people time to complete their transactions and avoid getting caught. Because when you buy a property here, you're often in a chain. It's different from an auction where you buy and that's it, you've got 28 days to complete. When you say I'm buying a property in the UK, you mean I'm buying it subject to survey, subject to legal, subject to this and that, and the chain of people. You might have to sell your property before you can buy the next property. So there's a chain of people involved. And so things can take months and months to complete. So a lot of people are waiting to complete and can't quite complete, maybe because of the legal process has taken too long, or they haven't got their mortgage in place, whatever, but it could be extended. Now, I follow property investors, and I follow a mastermind with a guy called McDonald. And we were at a session this week and talking about how prices are booming, everyone's scrambling to get in. And he said something that reminded me, don't follow the crowd, don't follow the herd, don't be chasing things that have already gone up in value. Buy right at the right time, not wait until the end. And it's this fear of missing out, FOMO as they call it. It's this FOMO that's pushing up the price of Bitcoin, isn't it? Because you think, it's gone up again, I must get in before it goes up again. And that's don't follow that herd and just jump into property because it's going up. Don't get into a bidding war. And the same thing applies to stocks and shares and Bitcoin. As always, do your research, take your financial advice, and buy right at the time. You make your money at the right time. Because if I say, will property prices crash in 2021? Well, nobody really knows. And to some extent, does it matter to a professional investor? Because the real secret is that professional property investors make their money from property, whether the market is rising or falling. Stock market investors, it's the same thing. Stock market and share traders make money whether there's a bull market going up or a bear market going down. They can still make money either way. And you can still make money from a property that's rented out, whether the value has gone up or down. So when you buy a property, you make your money when you buy the property at the time, by getting the right deal at the time, not in 10 years' time when you hope it's gone up in value, but you make it now. And if you bought something at the right price and you get it below market value, or you get a property that will go up in value once you've improved it, then it doesn't matter if the market goes down by 5 or 10%. And especially if you've got it rented out and you're getting income from it, you're getting rental from it. Like shares, you get dividends from shares. Property, you get capital growth, but you also get income in the form of rental if you're in the buy-to-let market, that is. Maybe it's not a time for buying to flip, because you could get caught with your pants down if you're buying to flip. But nevertheless, if you buy at the right price, you buy it at for the right reasons, then you'll always make money in property in the long run. We talk about investors. One of the greatest investors of all time is a guy called Warren Buffett, which is through his company Berkshire Hathaway. He's seen tremendous growth rates over the last few years, averages of 15%, and he's called a value investor. And wise value investors like Warren Buffett do not follow the herd or buy something just because the market says that's the price. They call it a sticker price. Just because the market says this share is worth X amount, he doesn't just jump into that. They buy at what they judge as the right value for that share, for that company, and they wait patiently, sometimes for years, until they get the company at that price, or they move on to something else. And that means knowing how to value a company. Same thing with a property. You know how to value a property to say that's what I consider is the right value for me. Maybe it's based on the rental yield you want to achieve. Maybe it's based on what you feel is right for the area. Not because everyone's rushing to buy it and they're outbidding each other, but you've got to buy what is right for the area. Maybe something that you feel that after you can improve it, maybe add in a room, is then the right price. So you don't just follow the herd into everything. And Warren Buffett actually is sitting on $180 billion of cash. Why? Because he thinks that the stock market is way overvalued at the moment. And I think the stock market, particularly in America, is way overvalued. You know, the S&P 500 stock share index in America, if you took out the FANGs, the Facebooks, the Apples, the Googles, the Netflix and Amazon, if you took those out of the equation, then the growth would not be the same as it is right now, because most of the growth has been in these high-tech shares, like Tesla, for instance, gone up by hundreds of percent. It's crazy. And also the market is at the moment largely based on tech stocks and future earnings from tech stocks like Tesla, for instance. Tesla is now worth more than Toyota and Nissan and General Motors put together, and yet they only produce a few thousand cars as opposed to millions of cars. It's just bonkers. So there's a lot of tech stocks at the moment that are overvalued based on their future earnings. They're actually losing money. They don't make a profit at the moment. Tesla makes a profit, but a lot of these shares don't make a profit. And Goldman Sachs has an index of these shares, which is usually about 100, 150, 180 shares. Now there's 400 shares on the US market that are based on future earnings and not making any money at the moment. So look at the value of things and don't just rush into everything. Take advice and do things. Don't be rushed. Be patient and do things properly. But if you want to really make money from property, you have to learn from the professionals. Learn how to buy right in the right areas for the right reasons, not because the herd is running into it. And take advantage of many free webinars that are on at the moment. Because of the lockdown here in the UK, there are many free webinars because they're doing it online. They're not charging people to go in. And there was one on Sunday, the Valentine's special. And in case you missed that, my friend Kevin is running the session again tonight, 17th of February, and at 7 p.m. And he'll give you the ultimate beginner's guide to investing in property. Learn how you can make £1,000 a month using strategies without using your own money, using other people's money with no money down investing right now. You don't need a big deposit to buy a property or to make money from property. You can use other people's money. There are many strategies such as rent to rent, where people are coming in to the UK sometimes from abroad. They've got no money, no experience, and they're making money by running a property business without actually even buying properties. So tonight, 7 p.m, get into this. My friend Kevin will be running this session again and start changing your life, basically. This is the time to get into it or to learn from it, and then wait and see how things go. But at least do your learning now. So I'll put a link up here, and please feel free to click on that link and join the free webinar tonight at 7 p.m. So thanks for listening. Have a great day, and I'll speak to you again soon. But just be careful out there. Don't follow the herd. Learn from the professionals, and do join that webinar. Thanks for listening, and bye for now. Thanks for everyone who tuned in on Facebook Live. Great to see you. Hi to Salome there, and everyone who tunes in. Thanks very much for listening, and have a great day. Bye for now.